to keep the system running, they need to print more money. And that means that overall stock markets will go higher. You might not see them outperforming other assets like gold or Bitcoin. And of course, within the stock market, we will have certain stocks performing much better than others. But generally speaking, if we are on the road to a cracker boom and hyperinflation over the next few years, stock market should go up.
Renowned economist Florian Grummes recently shared his thoughts on the state of the economy and the prospect of a boom period. He argues that unchecked credit growth and the resulting rapid price increases constitute a crack-up move, because they inevitably lead to a recession in the real economy and the collapse of the monetary system. He emphasized that crack-up boom includes the key features of hyperinflation and currency abandonment, including an excessive expansion of the monetary base and out-of-control inflation expectations. Grummes noted that people's inflation expectations have begun to shift as they consider making purchases now rather than later because of rising prices. The recent banking crisis was addressed by printing more money and flooding the system with liquidity, which he also discussed. Markets have been unstable, and there have been rumors that there may be one more increase in interest rates. The German hyperinflation of 1923 and the American bank run, which necessitated the printing of more money to save the financial system, were provided by Grummes as historical examples of crack-up booms. He contended that it becomes increasingly necessary to print ever greater sums of money in response to any strain on the system. When asked how he thought stock market prices would react to a crack-up boom scenario, Grummes said that while stocks would likely rise across the board to keep the system functioning, they might underperform commodities like gold and cryptocurrencies like Bitcoin. Dollarization and European central bank monetary policies are also discussed by Grummes.
The cracker boom basically is an economic crisis that involves a recession in the real economy and at the same time a collapse in the monetary system due to the continual credit expansion and the resulting unsustainable rapid price increases. So the cracker boom is characterized by two main or key features, which is excessive expansion of the monetary base or monetary policies, and that step by step lead to out of control inflation expectations. So there's a psychological component already. And the second key feature is that at the end, a resulting bout of hyperinflation, basically, which will end in the complete abandonment of the currency, because the market participants have no trust anymore. And at the same time, of course, you have a recession in the real economy. And it basically means the cracker boom is the crash of the credit and the monetary system due to the continual credit expansion and the price increases that are not sustainable in the long term, and the people losing faith into the money system. The end of a fiat money or a paper money system is always the same, and it's always hyperinflation. And we've seen it exactly that happening over the last 3-4 weeks again. Big pressure in the markets, banks going bankrupt. We had a bank run in America, and the response immediately is to print money. And that's how it is going to continue. And the amount of money that is necessary to be printed is getting bigger and bigger and bigger. And we're talking such big amounts of numbers nowadays. If you compare this with like 15 years ago during the financial crisis, it's going to be bigger and bigger. And I think it's unfolding in stages. Yes, we don't have hyperinflation right now, but I assume to save themselves, to save the system, to save the financial system, they continue to print more and more money whenever there's stress appearing. And there is so many reasons now that they won't be able to continue their hiking. I mean, look, they tried to tighten the balance sheet for 12 or 15 months, and within 2 weeks, 2/3 of it, they had to print again, basically. It's not working, and people have to realize this. But of course, if you or I would be working at the Fed making these decisions, we would probably have to do the same decisions like they're doing, because otherwise we would be risking a complete anarchy and breakdown of the system immediately. Everybody was super bearish in October last year. The hedges, especially by the retail traders, have been unseen and unheard of. And what happened was a big short covering rally, which then transformed into a bull market, basically, in stocks. And now the latest numbers again show that the retail investors and traders have once again ramped up their hedges and their shorts to protect their stock market positions, which again tells me that markets will not crash, they will not go down. Instead, much more likely they will go sideways or higher from here, probably even higher from here, because yeah, if everybody's short, the opposite will happen. And I think smart money, you have to be careful. There's also lots of indicators that could be misleading, but generally speaking, I think that smart money is rather buying than selling, while the dump money, so to speak, is rather hedging and buying shorts. And of course, if you're short and the market is not going down, you have to cover, and that means you will be the next buyer driving the market higher. And so I'm not like a super stock market bull here, but I'm not in the camp expecting a crash in the stock market. I think overall stock market probably sideways to higher. And yes, you will have the typical volatility and very likely a few weeks or months. Typically, seasonality wise, it's going to be August, September, a little bit more challenging time for the stock markets. But overall, I think given that the market, that the Fed basically has already turned around, even though they're not saying it, but you have to look at their actions. I'm a little bit skeptic that gold can immediately start run higher to new all-time highs from here, because I see too much optimism wherever I go, wherever I look, whatever I read. Everybody's bullish, everybody's expecting new all-time highs right now. I wouldn't be surprised if it takes a little bit longer and maybe we have one more pullback, let's say 1900, 1920 over the next few weeks or months. Usually the seasonal cycle for gold is not very supportive in spring. Usually you get an important low somewhere in June, most of the time July or early August. And from there you see a strong rally. And that would be the rally that could take gold towards $2,500 until the end of the year. So I'm a gold bull. I think very short term, I'm a little bit cautious. I think people are too bullish, but in the medium term, I think that gold will go to new all-time highs, and I think 2,500 by the end of the year is possible. We talked about the de-dollarization, and I think that's the big trend right now, harming the US dollar. It's more and more obvious that China is taking over the leadership on that planet, and that the West in general is not strong enough anymore to counter that. So you've seen Saudi Arabia basically moving to an alliance with China and Russia, and they start trading oil in renminbi, and the Saudis can then exchange their renminbi at the Shanghai Gold Exchange against gold. And that, of course, is not only driving the gold price high because there is a physical gold trade happening now, but it's also driving the US dollar lower because the days of the US petrodollar are basically done. I mean, this is the last 50 years. The Americans have been able to force their US dollar on the rest of the world because any oil trade had to be manufactured in US dollars, and that's done. I mean, the Indians, the Chinese, they now trading and buying their oil in renminbis or in rupees, maybe even in rubles. So things are changing, and it's a drastic change, and it's actually unfolding very rapidly now. And unfortunately, the people in the West, the politicians in the West, and also the central banks in the West still believe that we are in the same setup like the last 50 years. And the wake-up call is already happening as we speak. I don't think that the yuan is going to take over in the next few days, weeks, months, or years, for sure not. But just for the US dollar coming down from that dominance will make a big change. And I think the current exchange rate is kind of reflecting it already, and I think the dollar is going lower from here. We had a massive multi-year top last year in November, and again, there are so many macro factors at work now that I think that the dollar is going lower, which obviously will be very helpful and bullish for gold. It will also help Bitcoin. It will help the stock markets. It will help commodity prices. But of course, if you do your trade, if you do your investments, if you do your business in US dollar nominated currency, then at some point you will questioning if this is the right currency for you to continue to work with, right? If you see that it's constantly losing value, similar to what Europeans experienced last year. I mean, if you were running a business in Europe in euros, having your cost base in dollars, and the euro got weaker and weaker. And in the end, if you did the calculation against the beginning of the year, your euros were down 10% or even more. You could run a good business, but still lose money because of the currency, the weaker euro back then. And I think something similar is now happening to the dollar.
While investors like Chamath consider this to be inevitable, there are also those who dismiss it as nothing more than random noise. We'd have to wait and see how things develop. In the meantime, your opinion on this matter would be greatly appreciated. Write your thoughts down below. Thank you for watching Market Empire. We hope you found this video informative and thought-provoking in understanding an issue that is not being widely discussed in the financial world. If you have any questions or would like to learn more about finance and investing, be sure to subscribe to our channel and hit the notification bell to stay up to date on our latest content. And as always, stay smart and stay ahead of the game.